Financial Room. I'm your host once again, Natasha Bridgmohan. Thank you so much for joining us. So we are in the month of December, and it's all about the hot topic right now, real estate, which is hot and cold in certain areas. So a lot of good things that are happening in real estate, and we're going to talk about those good things and also the positive impacts along with the negative impacts. So in the suburb areas in Ontario known as Mississauga, Toronto, and City of Vaughan in the York region area, there has been stable, small increases over the average prices month to month, which is good. Nowhere close to the 15-20% increases that we've seen. More stability anywhere between 3.2 to 5.9% in real estate. However, inventory is still scarce, and there are some power sale signs that are happening right now. So there's definitely some opportunity, but the market is still resilient. The average prices are still high, and housing affordability is still a challenge. So there's a lot of things that are moving and shifting in the real estate market, and I really encourage you guys to pick up the phone if you are in need of getting any questions answered in regards to buying, selling, refinancing, debt consolidation, upgrading, etc., and actually adding an accessory suite too as well. Some of the negative impacts that we're facing in the real estate market right now is the higher interest rate, which obviously gets passed on to homeowners for mortgage cost of borrowing is really, really high compared to what we were used to last year and the year before. And government policies that are really, really stringent, such as the stress tests, being qualified 2% above an expensive price already, that can be very, very difficult. And vacancy and tax and foreign buyer speculation tax, all of these taxes have also have investors and foreign purchasers on the sideline watching and looking what's happening in the real estate market. Zoning and increased supply of demand, there's pros and cons. The zoning and red tape is not moving fast enough. Supply and demand is outpacing the responsibility for all levels of government to adapt a very strong, resilient housing infrastructure plan for developers and builders. And rent control in certain areas are out of control, or certain areas is unfair for landlords too as well. So again, finding that balance can be very, very difficult in a very volatile real estate market that we are seeing happening across nationwide, province to province. Higher immigration levels, these are great things. Immigration levels stimulates the economy, and it helps with so much economic growth points factors. However, it does pose housing challenges too as well, and housing inventory shortages and stronger economic recovery in certain areas. Higher immigration will help provide stimulus to those certain sectors in the economy to help for growth of our country. The government of Canada just recently announced a stay on overnight Bank of Canada borrowing rate. They were saying that the consumer price index has inflation rate has reduced well under 4%, and we need to get to 2.1 before pre-pandemic times. So things are very, very, very volatile in terms of the real estate market. But what I have to say for those real estate lovers, those real estate investors, and those real estate homeowners is, in times of uncertainty, there are always opportunity in real estate. And here at the BridgGroup of companies, we are on standby. We are ready to find solutions, resources, opportunities for you to be successful in real estate. So I want you to pick up the phone and call us if you're looking for mortgage services, consulting, real estate investments, or retirement, or renovation, or construction situations. We have a broad range of companies that are powered by the BridgGroup of companies, from legal to home renovations to investment and mortgage services and consulting. We are here for you, and thank you so much for listening to me today. And I hope you will pick up that phone and call and get the service and help that you deserve. Thank you again.